All right, welcome everybody. And I appreciate everyone taking time. And a lot of you I know, some of you I don't. And for those who don't, I'm Jeff Beggins. I'm one of the owners, partners of C21 Beggins Enterprises here. We got offices all over the place, about 11 of them. I live in Madeira Beach. We got offices all over Tampa Bay, Sarasota, Longboat Key, Tampa. So we've got a great reach and a bunch of agents, and we really have a good pulse on the market. So what we wanted to do today was really be sensitive to what a lot of us went through, and myself included, and talking about what are our options, because I got people talking with me all the time, asking questions about what's next, what should we do, what would you do, what do you think? So the answer, it depends. So what we wanted to do was bring in kind of a group of experts, and just to kind of answer your questions and see what we can do to help. And then so we're going to kind of go through some presentations and then really answer some questions. So I'm going to share my screen real quick and kind of get started on this one here. And boom, boom, boom. Here. There we go. All right, so our agenda, who we have with us on screen is we have Jim Everett, who's a good friend and my insurance agent for a lot of different projects and personal things as well, right here at Great Florida, right here in Madeira Beach. And so welcome, Jim.
Thanks, Jeff.
We've got Bill Carnes with us, who's another great friend, business partner in a lot of different projects, and all known each other for a lot of years. And so welcome, Bill. Bill, I told him he doesn't have to grace us with the presence of his camera tonight, so that'll be all right too. He's doing that stuff. So welcome, Bill. And then I've got a friend of mine, Bruce Sherlock, on the phone, on the call with us tonight too. And he's with a company called Flood Risk America. And I personally have used them to mitigate things at my home, and it's worked really well. So I thought that we would go through a couple of options for that as well. And then I'm going to talk to you about some of the things I've learned as far as what our options are from a disaster loan perspective, because there's some pretty good financing opportunities to do some of the things we're talking about here as far as mitigation goes, as far as lifting homes, potentially even selling homes. And Jim's going to go through a couple of, let's call them insurance hacks, right? Ways to kind of save a little bit of money and also think going forward things to do, and also dispel a lot of myths that are going on around in the marketplace right there. So that's our agenda, and that's what we're going to go. I think we'll be in and out of here within an hour. And if we need to be longer, we'll be longer. We have open times for this one. So first one I want to talk about is what everybody kind of goes to pretty quickly on this one. And it's, I'm just going to lift my house. I'm just going to get it out of the flood, which is a smart, natural concept, right? And it does make sense. If I can get out of the way of the flood, all better. That would be great. So the question is that really the best option? And what do we actually mean by that? And here, let's talk about it. So this is a couple of pictures. I drove around a couple of days ago, and these are pictures that have actually a couple of homes that are actively being lifted right now. Now, there's also a lot of pitfalls involved in this too, which we're going to talk about as well. And some people are not really getting what they bargained for. A lot of times they weren't told the full truth. And so that's one of the things we wanted to actually talk about. So this is the process where you can see, they literally put I-beams underneath, dig under the slab of your existing home and jack it up, right? Which sounds simple, but there's a lot more to it. But there's kind of want to show you the picture. So this is in process. So it's obviously going to go a lot higher than this, and they're going to have to do a foundation work there too. So you can imagine what this looked like on the ground and how it got flooded. And this is a picture from the street side about it being lifted up. And there's kind of a little close up on how they actually get those I-beams underneath the actual slabs and keep jacking it up until they can actually do the foundation. So this is another one, simple one level home, right? Jacked up. This is further in the process. So it's all the way up in the air until you can see these concrete blocks right here. And then they actually set back down the original slab on top of these pilings, that the new foundation. So they really have a garage underneath. There's no finished space under there. FEMA wants you to be out of the flood zone. So this is a way to actually do this. And it's pretty interesting, right? So you can see, I took some pictures from underneath how the steel I-beams that actually are supporting the actual slab are left in place. And then they build the pilings and the foundations up into here too. So there's just another picture of how that's actually working. Pretty interesting, isn't it? And, Jim, maybe we can talk about a couple of things that come to mind on this one, because the natural thing is I'm going to save money by doing this one from a flood insurance perspective. And then we're going to talk about cost of doing this one. But is that true? I mean, if I do this, am I saving money? How's that actually going to work?
Well, Jeff, it depends on who your carrier is. So if it's an NFIP policy through FEMA, the answer,
What is that? You're throwing acronyms around.
I'm
What is
sorry.
that?
So National Flood Insurance Program is FEMA's, the Federal Emergency Management Agency's, pretty much known as FEMA Flood or the National Flood Insurance Program. So that's what a lot of folks use. There are also quite a few private carriers, but so it's a standard National Flood Insurance Program policy that you can buy from just about any insurance agent. And the price is the same, no matter who you buy it from. So before they went to a new rating system called 2.0, you would absolutely save money elevating this home like this. So I have a similar home in Reddington Shores. I have a single story 1955 concrete block house, slab on grade, and I'm about 7.5 feet below base flood elevation with that house. So, I would pay about $5,000 a month for an NFIP flood policy. If I elevated my home today
Per
and
year.
and stayed with them, my cost would still be $5,000. I would save no money.
All right. So when did 2.0 come in?
I want to say October of. We're coming up on our second year of new business implementation of 2.0. There is a lawsuit right now. 9 states are suing the federal government over this new rating system. It was initiated by Louisiana, and Florida has joined the lawsuit, saying that the rating system is not actuarially sound or fair. So we'll see how that plays out in court. But
So that's a big issue, though, because 2 years goes by like that. So a lot of us have been in our homes for way more than 2 years.
yep,
So we remember the way that it was. And we've heard buzzings about insurance is changing, but you still get your policy. But you don't really remember what actually happened, right? So what natural common sense is, if I get higher, my rates go down cheaper. And that was the case, but not any longer. 2.0, just so you guys know, you've heard of getting your surveys and getting your elevation certificate, right? The elevation certificate is what determines where you are. If, let's say, Madeira Beach or Shore Acres, whatever it is, wanted you to be 13 feet, right, at new flood level or base flood elevation, and it's your elevation certificate shows you where you are. If you're a -3 or if you're a 4 for 5, it just tells you where you are. And that used to tell you what your risk level was, and that was higher, made your premiums higher. Is that an accurate statement?
yeah, that's correct. If you were anywhere below the base flood elevation target for your particular property, your insurance cost goes up accordingly. And the other issue inside of 2.0 is they take into consideration the value of the structure. Even though they still max out coverage at $250,000, they now take into consideration the value of the structure. So people in elevated homes that were paying like $600 or $800 a year for flood, because they were in an elevated structure, are now getting presented with renewals of $5,000 and $6,000 and higher.
Because it changed from not from how high you are, but to your proximity to the water. So even if
Correct.
you're in a raised home across the street from the canal, you used to be fine, right?
Yeah,
But now anymore.
that's correct.
So that's the trap a lot of people are falling into, guys. And if you haven't noticed, your insurance is going to double, most likely, right? If it hasn't already, it probably will, and then it's going to go up to that full actuarial rate over time on there. But what's the difference, Jim, by going to like a third party? Like, I know you place properties and some with not with FEMA, with the federal policies, and some with
Right.
carriers. What's the difference, and how do we know which ones we have, or should we shop, or what's the idea here?
Well, it depends on availability. So there's quite a number of private flood carriers in the market now. Their coverage is typically better. Like a FEMA flood policy insures contents at depreciated or actual cash value. A private flood policy insures at a replacement cost. They'll also give you loss of use. So if you have a flooded house with a FEMA policy, there's no money in that policy to pay your living expenses if you can't live in the house while the repairs are being made. So you do have that with a private flood policy, which is another advantage. Most of them have pool clean out coverage. So if your pool gets flooded and you got to pump all the water out and refill it, they have coverage for that. And they use an actuarial rate that's more sound. So the higher you are, the better your premium is going to be with those guys. They don't take into consideration these crazy models that the federal government's put into place with 2.0.
Great. I think it's safe to say federal government doesn't really want the policies, right? Don't they kind of
No,
call
that's
themselves?
correct. Well, FEMA's billions and billions of dollars in the hole, right? So they were tasked to come up with a way to increase their, if your claims expenses are exceeding your premium, you got to increase your premium. So this is the way they figured out how to increase the premium.
Awesome. So if I'm thinking about what I should do, is it easy to reach out to figure out if I have better options with third parties? Could I reach out to you and find out if you can?
Sure, absolutely. Yeah, absolutely. We can run any property, and we try to do that up front. I mean, a smart buyer and agent are going to want to know what an approximation of what those costs are going to be before they go to market.
And a lot of us are neighbors that live in our home, no intention of selling or buying anything. We just want to reduce our premiums and save some money or get some better coverage. So
absolutely,
if you'll type in your contact in that chat, if you would, please. So there's
sure.
Give you a call would be good. And then now let's talk about this picture on the phone on the camera right now, because let's talk about cost, because there's a lot of misinformation out there right now. So if you look at something like this, right, what does it actually cost to raise up a house? And you hear numbers thrown out all over the place, and you're going to hear it from contractors too. And I personally, as an advocate for all of us as neighbors, I get pissed when people pull bait and switches and don't tell the full truth, right? So there's a couple of people, I'm not going to name names of contractors that are not doing what is was expected of them, let's just say it as of that, right? And they come in and talk about what it costs to lift the home, and that's a mistruth, right? It's a half truth, because there is a cost to lifting the home. And then I'll tell you what that is. The cost to lift a home is roughly about $110, $125 a square foot, right? So you can do the math in your house. You have 1,000 square foot house, you're going to $110,000, $120,000 to physically do this, right? Lift it. But what they're leaving out of the equation here is you can't just lift it up. You got to put it on the foundations, right? And a lot of times, and Bill, you're online here right now, you talk about what does it cost to do these foundations, because the numbers are pretty staggering to do the helicoils or the regular pilings. Or if you can give us an idea about what does it cost to do, I was hearing like 50, 75, maybe sometimes numbers to actually get the foundations and the pilings in. Is that an accurate statement? You got to unmute yourself there. While Bill finds the mute button there, what they were talking about is about $50,000 to $75,000, and he can explain the process, because I'm not a contractor. I've seen it done and we do it, but actually driving helicoils, just kind of screwing in.
I found the button, Jeff.
There you go. Welcome. So tell us about foundations. Like, you build a lot of homes and condos, hotels, all kinds of stuff. So to do this, what are we looking at from a foundation standpoint?
So depending on where you're at on the water and how deep the pilings have to go, wood piles are typically right around $1,500 per piling, and small home might have 40 pilings. Large home, we've done several homes that had over 150 pilings. So that's the most affordable way, is to put them on put the wood pilings into the ground. And then the next expense would be to do with what they call a concrete driven pile. And those run about $2,000 a foot. And you're about $3,000 a foot for the helicals, which are galvanized steel screws that get screwed into the ground. But that's only part of the foundation.
Got it.
The foundation consists of the pilings, but then they have these large pile caps that sit on top of those pilings themselves. and those pile caps, along with what they call grade beams that'll run around the perimeter of the structure, that provides the lateral stability for the house. So, you know, foundation on a small house, probably $100,000, you know, total all in. And then, you know, depending on the size of the home again, you know, it can run up from there. But then you have your columns that sit on top of that, and those are made out of concrete block. The either if you do all block construction, or you could put them in what they call a poured in place concrete columns, and you know, that gets you up to the floor, and then you decide, do I want to leave it open underneath, or do I want to enclose it? Like the picture you're showing now shows the garage door, but the rest of the ground floor area is blocked in. Those blocks have to be breakaway walls, so when a flood comes in, those block walls in between the columns have to just fall right down, so the water flows right through underneath there. So, you know, that's another cost that you have involved. And then I think the problem I've had with this type of construction is you raise an old structure up. It's got 8-foot ceilings. You know, you raise a concrete block home with a slab on it, but if you have a home that's frame constructed, the ones that I've seen that they've raised up is they just raise the walls up, not the concrete slab itself. So there's a couple different ways those get raised, but when they get raised, you have to take the windows out, you take all of the drywall off, you got to strip all the wiring and plumbing and everything out of that structure. So basically what you're gaining is just a shell upstairs, and typically it's not going to have the ceiling heights that are desired today. It's going to have the low ceiling heights from the homes that were built back in the 50s, 60s, early 70s, right? So those are what I see as a drawback to this type of construction. But you know, if you just simply raise the house up, you still have to stucco the exterior. You're still going to have to put new windows in, you know, or if you can salvage the old windows if they were replaced over time, and you want to try and salvage them, you still have to reinstall them, waterproof them. And you know, in my professional opinion, I don't see a big cost savings doing something like this. I would prefer to demo it and start with a clean sheet of paper, and that way you can get the house that you really want to have instead of just raising the existing house up. And I don't think there's that big of a dollar difference to do that.
When here's why. I mean,
I'd like to study that more.
Yeah, we'll definitely do that a little bit more. Now look at how you're going to get to that staircase. That's that door. You also got to build a staircase. You got to build a front porch, right? That's not cheap to do that. You're going to have to run the plumbing now from down in the ground up to where it's going to be a new plumbing stack. You're going to have to run some more electrical to hook up the electrical now. You're going to have to, you know, do you want to be hoofing up 12 feet, 14 foot of stairs all the time? Or do you want to put an elevator in? There's another 50 grand for an elevator, right? You got to have to pour a driveway now. You're going to have to put pavers down. You have to put irrigation system back in. You're going to have to put some sod. You're going to have to put some landscaping in. So I'm just want to just tell everybody the truth on this. And this is going to be a $250,000 or maybe possibly more all in turnkey.
Just for 1,000 square feet.
Just for a little 1,000 square foot home, right? So yes, you can do that. And it's not a bad option, but it's worth taking a look at it, because how much more would it be to do what else you wanted and reconfigure the way you wanted to and actually just build? Because Bill, that's a good point. All you're really saving in this situation are the walls. Like, yes, you have your kitchen and your bath, but it's still the older kitchen and the baths on that one. And so that looks like we got a couple hands raised. If you guys want to unmute yourself, feel free to unmute yourself and ask a couple questions while we're here. All right, let's see. Oh, here we go. Katie, I just unmuted you. Feel free. Welcome. You can talk. What kind of questions do you have?
Can you hear me?
Yes, we can hear you. Yes, we can hear you.
Okay. My neighbor knows the woman that owns that house.
Okay.
And she's at 400,000.
There we go. There we go.
And then, all right, the other house that's on Bay Point,
Yes. Yes.
problems.
Big problems. So what are you hearing? I didn't want to air all those. What are you hearing as a neighbor?
Well, I won't get into it because it's private to him.
Yes.
But that's why my thought, because in Pinellas County, we have three choices. We can demolish and rebuild. We can, which our neighbors call Jenga houses because the wood under them looks like Jenga game. Or if the property can handle it, you build on top of what you have.
Yes. If you hit the 50% rule, which is something I wanted to talk about on here too, because
right. I didn't want to get ahead of you, but when it got to the point where it was like only like 250, it was just the other day, she was already at like 400.
Okay. Now,
so in all respect, really, like Bill said, probably or may have been better, could maybe have controlled the price a little better by, demolishing, starting fresh.
good point. Good point. And getting exactly what you want along the way.
Exactly.
Now that's great. Any other, thank you for sharing. Anything else you want to add?
That's all.
That's great. Thank you very much on that. Who else has hands raised wants to say something? Look, my mom's here. Hi, Mom. Did you want to say something? You're just waving at me. All right. Got another hand raised here.
Well, you know what? When I lowered my hand, I didn't have audio, so that's why my hand is still raised.
Okay, there you go. You're good.
Yeah.
All right. Who else do we have here? We got one more hand raised here. MK.
Hi, Jeff. Thanks for having the call. Can you hear me?
Yeah, we got you. You're welcome. Thanks for being here.
Thank you. I have a place over on Palm Street. I got flooded. Couple questions here. One, when you elevate the structure like that, concrete structure, are you worried about the foundation cracking? I'm thinking yes. Right? Things will shift as you lift it.
Yep.
The next question would be, so I've got like a 50 by 100 lot. Is there setback requirements that Madeira Beach would be placed on top of, like I'm feet of the borderline? Can I go up and have the same footprint if I demolish? Those are some of the questions that they didn't have maybe these requirements way back in the day, and they would have them now. And if you want to demolish and go up versus, just cut the roof off and go up. Can you talk to stuff like that?
Sure.
I am interested in going up because every time a storm comes, it's a very stressful time if you're low.
No doubt about it. I'm on Boca Ciega Drive, so I get it. I swim every time we get a big storm coming. So so let's talk about a couple things. And Bill, you can help me chime in on this one. So there is something in the code that allows from a rebuilding perspective to rebuild in the same footprint that you're on right now. Right. So the setbacks that you have from the sides and the rears, you confirm with the building department. We've seen it a bunch of times, Bill. I think you can confirm this. You would be able to build back in the footprint that you're in right now.
Correct.
Yeah.
Correct. That's one of the benefits there is to be able to build, whether it's a new construction or raising the existing home. You can do that within the same footprint as what was existing prior.
All right, let me add one more question if I could, Jeff.
Yeah,
since you had benefits there, right? So I got a block duplex on Palm Street. If I wanted to cut the roof off and go up with the same footprint, could I benefit by going an extra story and do 2 stories instead of just 1? And an extra value out of the house where I'd have more square footage, the place would, I'm not saying it'd be worth double, but it would be worth more, right?
The one thing you really have to look at there is the foundation that's under that existing house. If that foundation it is not on pilings, and most of them aren't, they're on what they call a spread footer, then in order to build up above there, you'd have to drive pilings to do that. And to drive them around the perimeter is a pretty costly expense to do that.
You kind of have to screw them down, right, Bill? When you're going that close to the structure, use the helical.
Yeah, you'd have to put the helicals in. Those are more expensive. And you know, you're going to be susceptible to some earth moving and some walls cracking. I wouldn't recommend putting 2 stories above an existing. I think you could get away with 1 floor above, but not 2 above an existing structure that's on a spread footer and a slab.
In essence, you're building a brand new house on top of the old house at that with the footers and the pilings at that stage, right, Bill? If you're
It just doesn't support the weight, right?
Right. So, and then you also, let's talk about the 50% rule since it's applicable right now. So on every one of your tax bills, you have your values, and you've got the land, the property value, and you have the structure value, the building value. So what FEMA looks at, and Jim, you can clarify this on this one, they look at the value of the structure.
That's correct. The land is excluded.
So we look at let's say your lot is worth $1 million, just for the sake of it. And the structure, they could say the land's worth 800,000 of that million, and the structure is only worth 200,000. And that's
correct. That's correct.
So a lot of people think, oh, I got $1 million value, I can spend $500,000 on a remodel, and that's not true. You're going to be able to spend 100,000. 50% of the assessed value of the structure itself is what you're allowed to do on a remodel. So on that question about your duplex, it's going to go back to that and figuring out, okay, what's the value on that structure? I can spend 50% of that on my remodel. But anything more than that, they're not going to let you do. You can't get the permit. FEMA won't allow the city to issue a permit if it's greater than 50% of the value of the structure itself on that. So that's a very important point here, because in theory you could, but with the 50% rule in there, it's designed to have you not do that. Because what does FEMA want? FEMA wants everybody to scrape their house and put brand new ones up on super high garages so they never have an impact or have to pay a claim. That's their ultimate end goal on that one. So 50% rule is a big part of the answer to that question about the duplex. Now there's ways to go, I'm not saying get around that, but there's ways to play that game where you can phase. Bill, if you want to talk about that, can you remodel in phases to play with the 50% rule?
Well, there's a couple things you can do. Number one, the property appraiser's value of the existing structure is always extremely low. So the first thing we do is we get an appraisal done for the replacement cost of the home, especially along the water. Sometimes you only get a house worth $50,000 or $75,000 under the 50% rule. You can get an appraisal, you can get that up to $200,000 or $300,000.
Right.
You can do half of that. So that's the first thing we always do is get an appraisal, especially when you're trying to add on to the existing and not build it up. And then if you have to do it in phases to ultimately get what you want total square footage wise, you would have to do it in phases. You could do, say, an addition out the front of the house, get a permit, do the work, close out that permit, then you could start over with the new 50%, which would be what the existing house was worth plus the new addition. So typically you can do them in a couple of phases like that if you want to do a substantial, addition off the front of the house, addition off the back, raise the ceiling up, get higher, raise the roof up, get higher ceiling heights in there. So there's a lot of options there. It's exactly what I'm doing with my daughter's house over on Johns Pass Ave right now.
That's right. That's the remodel there.
Yep.
And Bill, if we wanted to build new, one of the questions I'm just reading here, is there, I know it's such a loaded subjective question, but people's minds
Appreciate it, Jeff.
Yeah, no, I know. But give the full ass range, right? Because I mean, look at the range of what it costs just to do a foundation, right? For lifting a home or for building a home. So you got to do the foundations, then you've got to build the home on top of the foundation. So when somebody's thinking about, well, screw it, I don't want to raise my old home, or maybe I don't want to spend 400 grand to raise my home out. Maybe I should consider building new. Now it ranges so much with finishes and fixtures and windows and appliances, but what's a ballpark gut range, like slow to high, that
Exterior styles. I think
Yeah.
today, with Biden economics, inflation where it's at, we're probably in the low range of maybe $300 per square foot.
Okay.
We've got some projects that were $1,000 a foot, but for nice middle of the road quality, all wood cabinets, quality finishes, tile or a wood flooring inside, about $400 to $450 a foot would get you something real nice.
That's great. That's a good number just to kind of keep. And now you can go nuts with your $25,000 Sub-Zero fridges and your crazy extravagant floorings and stuff, but really nice home, right, is in that range right there. So you can kind of do your numbers in your mind as far as how big a home you'd want to build. And that's just the way the costs are right now. Now, one of the things I'm excited about is because Governor DeSantis declared Pinellas County and is a disaster area, right? It was a flood disaster, which they did not do during Ada, which created all kinds of problems for people. But because we did this, now FEMA has disaster relief, right? Which we did not have during Ada when it came through a few years back. So what that does is allows access to FEMA money, right? And it's pretty interesting. I've been on the phone with different SBA. There's a couple different things. There's FEMA, and then there's the SBA, Small Business Administration loans. So FEMA's are grants, right? So FEMA takes an area that was hit and it says, oh man, there's a lot of destruction there. We're just going to go give the city grant money. The city is applying for FEMA grants as we speak, right? To make sure that we have money. Every city around here in Pinellas County is going for grant money right now. So if you wanted to go get some of that money, you're going to have to be in line basically at the city, wherever you are. And they're going to go in order of repetitive losses, damage, and they have a whole criteria calculation as far as who's going to be in line to get that FEMA money. And it's not guaranteed, and it's not quick, and it's a pain, right? That's just telling you what it is on there. So that's pocket of money number one, which is great. And FEMA's like, okay, we'll give you some money to raise your house up, or if you had some severe losses, potentially for rebuilding, but mostly just for mitigation, flood mitigation, and for raising it up, right? That's kind of what their interest is on that one. Now, the SBA, Small Business Administration, has disaster relief funding out there, which is not federal government funding. It's subsidized. So they're able to do rates at 2.5%, which is like unbelievably awesome, right? Especially in the rate environment that we're in right now. On the good news, I just quoted a couple of new construction homes today, and I got firm quotes at 6.5% interest rates, which is awesome. For those of you who are following rates, that's music to everybody's ears in the marketplace. So that's better than it was when it was bumping 8%, but it's still not as good as it was a few years ago at 3%. But SBA is coming in with 2.5% money that we can just apply for. And it's you qualifying for a loan. The thresholds are low. It's you having to take a loan out, but it's super cheap money. So I urge every one of you to check that out, to go to the SBA.gov, and there's click for Hurricane Idalia relief and you can actually fill out your scenario and apply for the money. Now, two things that we can do here. Number one, get money to lift your home up. But as we kind of went through, that may or may not be what you want to do. In some cases, and I did not get all the answers, which I talked to 3 different people trying to get the answer, but they're very non-committal. The answer is put in your application, and then we're going to talk to you and see how much we can give you, is the answer. So what they told me, though, is that there is money to do rebuilds, right? Not just mitigation for raising, to actually rebuild homes too. I do not know that, I don't know if anybody here has the qualifications, raise your hand and tell us. But I haven't able, they were not able to kind of give me the keys to the kingdom. They said you got to go through the application process. And Josh, I know you're on tonight. You're the closest one I know to get that answer. But it's really exciting to think that you could get 2.5% money to do a rebuild, right? Or worst case, even raise your house up, because that would be pretty. Even if it was $400,000 at 2.5% interest, that's pretty reasonable, right? But then you're like, wow, if it was 700 to build a new house or 600 to build a new house at 2.5% interest, that's a gift, right? So I want everybody to go there and SBA.gov and click on the Hurricane Idalia relief, and you can fill out your application. It asks your address, all the stuff, and then you'll actually physically talk to a loan officer to get you into the program to see what you qualify for and what programs they'll give you. And it's a loan, you're going to have to pay it back. It's not a grant, but it's super cheap, so it's almost like free money on that one. So I was super excited to hear about that aspect there. So that'll be amazing, Bill, if we can get tap into those funds for everybody on here. Okay. Any questions on this aspect of it? And I know we're kind of lumping all the categories in together, but I want to make sure they're just relevant the way we're doing this here. Next thing I want to talk about is these. Okay, now Bruce is on. This is actually a house in Madeira Beach, and this is different flood panels that are pretty cool. And I think most everybody, when we got water, we only got a few feet. So this is an interesting product that I physically have at my property, and it's an interesting. So Bruce is the guy who I got mine from. So he was kind enough just to kind of get on. Do you want to talk briefly, Bruce, about kind of just what these are made of, what the concept is, and how much they cost? And because Bruce is cool, and
Yes, can you hear me?
Yeah, we got you, Bruce.
My name's Bruce Sherlock. I represent Flood Risk America with this product here. I also, for 17 years, was Smart Vent Foundation Flood Vent rep in Florida. I covered the state. So all that information you were giving out, I've heard many years before. There was also grant money for each county. Just to let you know, 10 years ago, I used to hear that each county had a certain amount of grant money all this time to do a rebuild. But like Pinellas and Hillsborough had maybe where they could do 1 to 2 to 3 homes each year.
Yep.
And that was a waiting list. And it was severe repetitive loss to qualify.
Yes.
I have no idea recently where you're at, but I agree that more funding's come in, and that's somewhere to go with that. But I did always hear, I had a house in South St. Pete that lifted his house, and the guy was from New Jersey, and he owned a lumber yard, and he had 2 houses on 2 lots, and he's raising one of them. And when he got done, and our company actually knew him very well as a distributor in New Jersey, he said, I've been better off to just tear it down and start over for money I spent to lift. So that's always been what I've always heard. But back to this product, it's FRA. It's actually, the difference is this is a dry flood proofing product that is required by commercial development. So all commercial has to do dry flood proofing. Residential was required to do wet flood proofing. Wet flood proofing was letting the water in, letting the water out in the area below non-livable space, which usually is the garage or crawl space. This is in the areas that are below base flood with dry flood proofing. You can do this, but you don't get any credit basically from insurance or what have you in doing this. But it's for your own peace of mind, and you can keep the water out. This particular was in Madeira. I had one that just gave me a text back last week that he got very much little water or nothing in his house that went up 18 inches around it. And that was on, anyway, it was just north of there. But this product is actually, Cat 5 proof. You can't break that. You can't dent it. You can't do anything with a sledgehammer to it. It won't scar. This product came, they have the patent on this product for flood, and it came from NASA. It actually is a 1-inch thick sprayed on product, turns solid hard, and they use this with padding behind it, like a 1/4-inch pad, goes up and down the door frame. Also on the bottom part, they have anchors, and all this is hand tight. You can screw down these anchors, and that will stop all air and water. And it has a guaranteed lifetime warranty on this product. But all commercial projects have to have this. We have it like at Tampa General Hospital. We just did, I did Hogan's, and all these places have to have it. But if you ever go to a, say your Publix grocery store on the beach road, look at the little anchors at the doorway when you walk in. They're little silver knobs that are screwed into the ground. That goes to their anchor, and then their flood panel goes on top of that when they pull that little screw out. Okay, so these screw in 1-inch deep, and basically they do hand tighten, and each one only weighs about 3.5 pounds a square foot. So a lot of these panels are like 30, 40 pounds, 50 pounds maybe. Okay, and so a homeowner can do this and put them away, and you can put them in a garage side by side, and then bring them out when you need them. And you can install both these right here. You can install in less than an hour, and you can leave them up basically. So if you know a storm's coming a week ahead, leave them up. And if you think another one's coming after it, leave them up, or only take one down. That one, the double door with only about 1.5 inches up, is a condominium, not particularly this house. There is two projects you're seeing in these screen pictures. That one there is the condo decided. That was a community center, and they only wanted the door on both sides of this building like that. And the reason they didn't go any higher, they didn't worry about it, because as you can see, you only go up to where the edge is on the right, because the windows would be there, and you can't really block that all the way down unless you put a barrier all the way around the building. It wouldn't have made any difference. They'd come in the windows. So that's what you got to look at your property. We do the garages. It's pretty much a 2 to 3 foot type system, I would recommend. And then if you got flood higher than that, it's a flood claim. But if not, if you only got that 1 foot a lot of times showing up there, or a little more, then it's worth the expense. And like I say, it's a lifetime warranty on the product. I've been doing it for about 10 years. And this is a separate type product that is dry flood proofing. And all your systems are used by, like I say, a lot of the big manufacturer. We do the Marriott's, Hilton's, a lot of the hotels all have this up and down the coastlines.
That's right.
Can I ask you a quick question, please?
Sure.
So either per square foot of panel or per lineal foot per panel high?
About $120 a square.
A square foot.
Yes.
So if you wanted to go up 3 feet and you had a 16-foot opening, you had 48 feet that you'd want to cover, should be about $5,000.
Yes.
Yep.
Thank you.
Yeah, this is it's expensive, but is it really, when you think about all the expenses on the baseboards and the cabinets and the beds and the mattresses and everything you see on the sides of every road? So, and I don't think we're gonna.
The project you're showing me there, this garage, the front door, those 2 bay sliding doors, the project cost at the end of that was about $14,000.
Okay. There's the front door. Yep. There's the garage. There's the sides. Okay.
Yeah. Great.
And I think we've got a couple of hands raised over here. So let me tend to those here. Gigi, you're up.
Hey, thank you. So I had a question. If somebody's in the flood zone and they wanted to add an extension, like for an additional bedroom, does that new construction have to be higher up because of the flood restrictions, or can it be the same height as the current house?
That's a great question. Bill, you want to address that? If you
Yeah,
got,
that would so as long as the cost wasn't greater than 50% of the current value of the structure itself, then yes, you keep it at the same level. Once
Okay,
you get
perfect.
above the 50% of the current value of the structure, and it's real important to know that it's the structure itself, it's not the land and the structure,
Yes, just the structure.
just the structure. Yeah,
And that's
and
all, and that's not just Madeira, that's, Dunedin and anywhere
that's
basically.
and anywhere along the coast. That's
Right.
a FEMA
That's a
50%
FEMA.
rule.
Yep.
That's a
Okay, thank you.
nationwide program. Yep.
So the key there is to get some good people on your side to make sure you get the appraisal right and get the cost right to get that done. So,
That's correct.
Okay.
yeah. MK, I didn't get your first name again, but you were your hands up. You have another question for us?
Yeah, two questions real quick. The 50% rule, is that only to apply for the FEMA benefits?
That's
No,
no.
that's a building. That's required from the building department in your municipality.
So if I have a one level duplex, 1,600 square feet, I can only go up one level, 1,600 square feet.
No, that's
No.
not necessarily true. It's the 50% of the value that's placed on you. Go into the Pinellas County Property Appraiser's website, and you'll see the exact breakdown of what they're giving you value on your dirt versus the structure.
Yep.
So structure is 50% of that number is what you're allowed to do on a remodel, and you can do whatever you want to do up to that 50% number. And just so you guys know the reasons why, is the city has guidelines that they follow to get funding, right, for when they have disasters. So in order to be FEMA compliant, or whatever you want to call it, they have to enforce these rules. So that's every municipality. So that's the 50% rule, is the building department cannot issue a permit if it violates a 50% rule.
So a good
even if-
a good rule of thumb there, MK, would be if your structure is 1,600 square feet and you got an appraisal done, because as I said, Pinellas County is going to have that structure value very low, but you should be able to build on approximately 50% of the square footage that you have now. So you'd be able to add on 800 square feet without having to tear it down and build it back up.
Understood. And then for the wet proofing that you show here on your screen, Jeff,
Yep.
I did something similar for both Ada and this last storm, Adelia. I essentially caulked my doors. Went up and just silicone caulked everything, and then used like a multi-tool to break them open. Ada, I was pretty successful to keep the water out. This one, I had 8-9 inches outside the door. I had probably about an inch inside. But one thing I noticed with this, the wet proofing is so a concrete slab, concrete is, it's kind of like a sponge. It takes a little longer for water to go through, but if I put a moisture meter, and I found out a lot about moisture meters during this storm. I mean, I've been running dehues and I'm down at 35% inside the building for the last 2 weeks. My floor is still at 100% moisture. Tile floor, I'm 100%, and
Not uncommon.
don't see that ever going away.
I agree.
Does this system is only good if you got a real good paint job, it's sealed around the house, and then it's still going to come through the ground, because water, I mean, in Madeira Beach, you dig a foot down below the ground, you're finding water, right? Go look at the storm drains on the road. As the tide goes up and down, you see the storm drain water level come up and down just that much.
Even at high tide, it comes up above the storm drains in Madeira Beach.
Exactly, like a super moon. You'll see water on the streets during a super moon.
Oh yeah. And just a king high or just a high tide. I mean, there's some areas in Madeira that are very low.
Yeah, and it's any. I actually had a client who had water come in through their hot water overflow line. It
Yeah.
wasn't plugged, so water came into the house through the hot water overflow line and got into the house that way.
Oh, I'll add one to that. You need to plug your sewer drain because it comes up through the sewer too. I put a test plug in the sewer so you don't see it coming up through the toilets in your bathtubs inside the house. When you do the system that you have on your screen here,
Yep.
they sell an inflatable test plug, and I put in a sewer access there that I can stick it in, hit an air hose, and basically stop the sewer. You can do it by a one-way drain too, but it's kind of on a slant for me. So it worked. I was able to keep a lot of water out, but not all water.
I think it's almost going to be impossible to keep everything out, because if you look at this picture, if this wall wasn't sealed properly to the slab and waterproofed and painted properly, water's going to find a way, guys. I mean, we had water sitting up on our houses for 8 hours, right?
Yeah.
It's
Water. I have a saying: water's a spineless cockroach. It will get there.
Right. So we're talking about mitigation. Unless you go up, guys, it's just mitigation, right? This certainly will help you get a couple inches rather than a couple feet. And what's the value of that? That's up to you, right? So these are kind of the mitigation options of dealing with what we have, or say, screw it, I don't want to do this anymore. How do I go up, right? And those are the kind of that's the value we wanted to kind of bring different options out here today, because we all know sandbags aren't doing much, right? They help divert a little bit of water, but you're going to have the bags and the tapes and the seals and the sandbags and just really cover it. But it's still going to find a way in, right? I think we just deal with the fact that we live on the coast, and it's a tax that we pay for living on the coast. But if we can reduce our exposure, we'd be a lot better off. That's kind of our goal on this one here. So Jim.
Yes, sir.
A couple questions for you, because I think it's important. What can we do with our existing homes, kind of insurance hacks, if you will? What can we do to save money on our costs, on our premiums? I know there's some certain things we can do. Can you kind of give us a little rundown on some things we can do to protect ourselves and save a little bit of money and get requoted?
Yeah, absolutely, Jeff. I mean, probably the number one thing you can do is normally when you're purchasing a home, and you can do this after the fact, even if you own your home currently, anytime you make any improvements to the home, like you install new windows, doors, things like that, you can get what's called a wind mitigation inspection. And we use those inspections. They tell us what the home has in place that helps mitigate damage in a storm. So like clips on your roof, straps on your roof, to hold the roof to the wall structure, and a couple of things you have to understand, like for opening protection. A lot of window and door companies will tell you, oh, hey, you put new windows in your house, you're going to save a lot of money on your insurance. But unless every single exterior opening is protected, you will not get a discount. And the reason for that is the extreme pressure difference that's created during a hurricane. A hurricane is such an extreme low that if any opening fails, that you have a sudden pressure change, and your roof is typically compromised. So I had a client that spent $100,000. He came to me after the fact. He spent $100,000 on brand new windows and doors in his home, but he had one of those glass block windows in his bathroom, and they're not wind rated. So he was not able to get opening protection credit. But like for my house, I replaced all my windows, all my exterior doors, my garage door, and I saved close to $1,000 a year every year on my homeowner's insurance for that. So those are important things you can do. Plus, you have the protection of wind-rated windows and doors.
And you have people that you work with that kind of can do the mitigation?
Yeah, absolutely. I mean, typically any licensed Florida home inspector can do it. I typically tell folks if they're making a new purchase, most of the time we have to get what's called a 4-point inspection. If the house is 25 years old or more, which is typically the case in Pinellas County. And at the same time that he's doing that inspection or a full home inspection, you can ask him to do a wind mitigation inspection at the same time. Those same guys will come out and do a separate wind med inspection for you as well.
Right. And we can help you get people who you need. Any agent friends you have, your insurance guys, Jim will hook you up. I'll hook you up, Bill. Whatever we can do to help. Whatever
Yeah,
we can.
age of roof also drives a lot of it too these days, Jeff.
Yes. Yes. And to your point, you got to do everything. You can't just do windows without doing your door. Right. So
Right.
it's about protecting the whole asset there.
Yep.
Very good. All right. Any other questions? This was designed to be an hour, but we've got time for any other questions that you guys. Hopefully, we brought you guys some value today and some ideas. We've all been through a lot, and it's stressful. So the goal is to really see what we can do. So a couple more questions here.
Jeff, I want to thank you for taking the time out of your day to help educate people on the options that are available to them. I think the information was well presented, and you did an excellent job. I'm very proud of you.
Well, thank you guys. Thanks for your giving back, Bill and Jim. And we're all right here in Madeira, guys. So we're right in the thick of it all. So couple questions, couple new messages. Thank you, all this stuff. Okay. And if you guys have anything else, we're right here. I mean, you've got our emails. Any of our agents who invited you here, just kind of let us know what we can do to help. Right. And you've got Jim's contact information in this whole chat. Bill's right here with Beach Builders, right here behind our office on 150th. I'm right here on 150th. A lot of our agents are on the calls. They've invited you guys to this, and we have quite a group here tonight. So I'm happy to have done this for you guys. So anything else we can do, you always let us know. We're here for you guys, and have a great evening. Let us know what else we can do to help.
Thanks, Jeff. Thanks for putting this together.
Thanks for being here, Jim.
Thanks, Jeff.
Thanks, Bruce.
Thank you, sir.
All right. Bye, guys.